Yes, I'm Todd Bridges. I head up ESG research and strategy development at State Street Global Advisors. My team is focused predominantly on the designing of an ESG data platform for our firm and designing strategies of the future. We try to keep an eye on the 3-5-year horizon of what regulators are coming down in the European Union on with respect to ESG and climate. We are carefully listening to the market from the asset owner side to see what they're looking for in sustainable investing solutions. And then we spend considerable time on refining our best empirical solutions on ESG, climate, and exclusionary screening. Yeah, perfect. So again, State Street Global Advisors is an investment manager, asset manager in particular, and sustainability is the core of what we do, especially with respect to sustainable investing solutions coming out of my team. We really want to, first of all, assess all information out there in the mosaic of information that is fed into our investment process. And sustainable information, or ESG, or climate data, has become crucial to calibrating our investment models. From the risk side, from the return side, even from some clients on the values alignment dimension. So with respect to designing exclusionary screens on alcohol, tobacco, and firearms, for example. So we need to be able to assess sustainability and the sustainability data that's coming into the market. It's predominantly focused at the corporate level, the corporate entity level, and we have been building what we now think is the largest ESG data platform on capturing every dimension of sustainable information of corporate entities. That has well over 12 data providers, 25 data products, and 4,000 metrics fed into our systems on a monthly basis to try to potentially calibrate the sustainability profile of a company. There's a particular project that we've been working on for about 18 months called the R-Factor scoring system, which essentially tries to harness the sustainable information of companies into an investable signal that we could feed into our investment process. And so sustainability is pretty much everything that we do on our team. It is now, I think the sustainable investment book of business for our firm is up over $200 billion. And it's still relatively small compared to the $2.8 trillion that we manage, but it's growing, and it's growing fast. And our team is it is a high growth area for us, and that we will continue to build out new innovative advanced solutions. Yeah, so that is the core crux of advising our asset owners around the world. It is one thing to get the data and the very, very best-in-class data from around the world. However, it's really the next step is what do you do with that data? How do you make what is structured or unstructured data on a company's sustainability profile into a meaningful score that you could feed into an investment model? And that is a complicated process, but we have designed a series of tools, and one is an internal scoring system called the R-Factor scoring system. The other dimension is that we really want to be the eyes and ears for our asset owner clients on designing full ESG integration solutions, and that includes at the portfolio construction level. There's many ways that one could integrate ESG data, and to capture all dimensions of the E, S, and G in a coherent, cohesive way is what really differentiates us in the marketplace. For example, we have been working with the Bloomberg Index team on the equity and fixed income side to design a new family of indices, ESG indices, which are full ESG integrated solutions. And it really is an attempt to try to advance sustainability information into what we now find is one of the largest growth areas of capital markets and investment management is the passive investing space. So can a passive investment allocation by CIOs and asset owners around the world do good in the world of sustainability? We think that you can both make those strategic asset allocations to passive investing, but then also increase the exposure to ESG information and thereby move us to a more sustainable capital market. Well, yeah, we've been coming to the event for multiple years now. We think that within the North American market, it's one of the best, if not the best, bringing together of the minds, both from the asset owner and asset management perspective, but then also data, rating agencies, regulators, and many of the city and state governments as well. So the ability to bring the investment ecosystem together is invaluable. There's only a few other organizations that do this internationally, but with respect to North America, I think that it's the best group of participants. And for us, it's nice because in the normal day-to-day interactions, we work with institutional investors, predominantly asset owners, along the full spectrum of sustainable wealth or sustainable sovereign wealth funds, to central banks, all the way down to the state pensions, public pensions, down to endowments and foundations and financial intermediaries. And that's who we usually deal with on a day-to-day basis. So these events allow us to take a step out of that traditional space and chat with what they're doing on the regulatory front, both in North America, APAC, potentially Europe. And it also allows us to reach into some of the rating agencies and data companies that we are not that familiar with. So it's a nice opportunity to check in once a year to what everyone else is doing in the ecosystem.